Hey, what's going on, y'all? I want to welcome you back to my channel. And in this video, I want to break down this 100 pip move that I caught on gold earlier today. And so I'll walk you guys step by step what I saw, my approach, and let's go ahead and get into it. So one of the things that I noticed with gold when I first started looking at this pair this morning is I noticed that gold broke 1900, it pulled back, and then it came back down and exhausted out. And so we had these candles to close in the exact same spot, which means that this candle didn't necessarily close below these two candles here. So it lets me know that it's not quite ready to kind of break down. And then one of the things I wanted to look at as well is kind of, look at market structure to kind of see exactly where price is and just let's go ahead and just look at the whole entire story of what gold is telling us right now. So one of the things that I noticed was here, we had a higher high, we had a higher low, a higher high, higher low, higher high, and another possible higher low. We don't know exactly just yet about this particular price action here because it was not completed, so I don't know. So some of you may say, well, how do you know that this is a higher high and things like that? So when you're looking at market structure, there's two types of structure. You have macro and you have micro. Now, what do I mean by that? Macro and micro. Macro being the big picture. Micro being the small picture or the minutia or the little stuff that's the noise, as we call it. The noise that's in between the big picture. And what I mean by that is when you're looking at the big picture from a macro perspective, you're looking at this. Big higher highs, higher lows. But from a micro perspective, you got all this type of stuff here, all in the middle, which is trying to psych you out. You got all this stuff here, price coming up, doing things like that. So you don't want that type of stuff to psych you out. So you want to kind of look at the big picture. You want to look at those big moves, where price is stopping, things like that. Where's price pushing to? As you can see, it's breaking these things here. So one of the things that this lets me know is this point here is my last point of structure before I see a break of structure on the H1 time frame. So one of the things I decided to do, because I like to look at a lot of entries and things like that on the 15-minute with gold. So basically what I did was I dropped to the 15-minute to kind of look at price action. I see that price came down here, gave us a possible low on the 15-minute time frame. It came back up, but it never broke this high. So which lets me know that this is a possible lower high, and then it broke this low here, giving us a lower low. So now we have more than a 2-candle pullback, give us another lower high, and it broke this last lower low, which lets me know on a 15-minute time frame we're in down structure, another lower low. So let's go ahead and play the candles back and kind of see what price is giving us. Okay, so if some people would have possibly took a buy here and possibly put their stop loss under here, one of the things that I noticed, liquidity possibly would have took out all of these users here or all of these retail traders here and then push back up. One of the things that I was looking for on a 15-minute time frame before I take any type of trades was, let me go ahead and erase this because we thought initially that that was going to be structured with the 1 hour, but it's not, because we can see that that actually broke. So now what I want to see is, are we going to get a break of structure on the 15-minute? Because think about what I said. We're looking at the big picture. We're macro right now. We're not really looking for any sales unless we break this last structure point here. So right here, I notated and said, if this point breaks, then this will be my break of structure on the 15-minute. All right, let's go ahead and play price and see what we got. So as you can see, price gave us a break of structure. Now, when you get a break of structure, you want to wait for a pullback and then draw down to a smaller time frame to kind of find you a nice sniper entry. So so we see prices pulling back. Now, what did I say? If we're on the 15-minute, let's drop down to the 5-minute, because a couple of things that I like to do as far as my strategy, if I get a break of structure on the 15-minute, I'll drop to the 5, 3, or the 1-minute to kind of find different demand areas, imbalances, things like that. So I'll start with the 5-minute. Let's go ahead and look at this and see if we have a couple areas that we can notate. But first, let's go ahead and use our Fibonacci tool. We want to take it from the swing low and the swing high. Mark our Fibonacci tool, just like so. Now, anything in the red zone here is retail pricing, and we don't want to look for any entries or any pullbacks off of this zone here. Everything in this golden zone is considered as premium pricing, and this is the area in which we want to look for bounce backs, trades, entries, the whole 9-yard kit and caboodle. Okay, all right. So as you can see, we can actually remove our fibs because we see price is already beyond that point. So now what we want to do, we want to look for possible entries. We want to look for order blocks, imbalances, anything within this premium zone that can possibly bounce price back to the upside. So the first thing I notice is here we have a order block right here that can be a possible level of demand to push price back up. We'll notate that. Now, one of the things that I really noticed that really stood out to me is you have this order block down here, which was the initial push that actually broke this short-term high over here, or this short-term low. It actually broke this point. And what do you see right above this? An imbalance right here. So this lets me know that this is a strong point of interest that we definitely want to look at for a possible entry. So for me, because we have these two confluences, we have an order block that planted, we have a push that broke this last high here, which gave us our break of structure on the 15. So basically, I'm going to remove this level of demand and I'm going to utilize this area here. So basically what I did, I said, okay, stop loss right here at the wick, because if it break past this point, then our analysis was wrong and I can accept that L. Now, let's look at possible targets. I see that price stopped up here, gave us a pullback, and then broke down. So these bodies right here is a definite point of interest for me as far as a potential target. Let's go ahead and notate our target. Entry right here above this imbalance. TP right up here. Stop loss right here at the wick. And then we took a buy limit on this trade, and let's let it play out and see what it did. Price came down, broke through, wicked, took us right into profit. Now, one thing I want you guys to understand, whenever I take a trade, I'll use a GAN box. And one of the things I did with this particular GAN box is I notated 2 points on this GAN box, a 50% and a 65%. So whenever I take trades, depending on how I'm feeling that day or depending on how many pips that particular trade is, I will always notate either 65 or 50%, and I'll set an alert. And whenever price gets to that point, I will take half of my profits. I will take partial profits. You never want to be almost at your target and leave your entire lot size on the table. So basically, when price hits 65% for me, what I do is I take partial profits, whatever I've decided to, whatever lot I've decided to take that day. So if I took a standard lot, I'll take a 0.5 right off the table. And from here, I'll move my stop loss a little bit in entry. That way, if price come back and stop me out, I'll still be in profit. So from there, let's go ahead and let it run. Price broke through my 65%. I took partials and I let the rest run. And then from there, price went on up to my target and I was golden. So you guys, I hope this really helped you guys, give you guys a little bit of clarity of how I actually looked at the market and caught this particular trade. Like I said, I started with the H1 to kind of look at market structure to see where price was going. Then from there, you want to look at the story. Look at, what is the story telling you? Drop down to the 15-minute. If you get a break of structure, use your fibs. Use your fibs. Wait for price to pull back within that premium area. Look for confluences on the 5, 3, and 1 minute to take your entries. You want to look for demand zones off of order blocks. You want to look for imbalances, things like that. Look for price to pull back. You can set your buy limits or things like that, or you can just, watch price, wait for it to pull back, take your entry. However, you want to make sure you stick to your guns. You want to make sure you stick to your trading plan. Don't jump the gun. If you miss the entry or it don't give you what you're looking for, hey, wait for another day. There's always another time to take another trade. But stick to your trading plans. Don't let your psychology take hold of you or get the best of you. Always stick to your guns. And I'll see you guys in the next video. I'll holler at you. One.